Hey everyone, Couch Investor here with another video for you today. In today's video I'm going to cover Netflix stock. Like I did in my Lemonade video, I asked you guys topics and questions you wanted me to answer. So I'm going to go over those questions in this video as well. I'm going to do a little stock analysis and then at the end of the video share my own opinion on the matter. Now before I get started, I just want to thank everyone that has been subscribing lately. We're on our way to 3,000 subscribers. So if you haven't subscribed yet, maybe now is the time to hit that subscribe button. And if you like the videos, maybe leave it an early thumbs up as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Right, so before I get into the topics and questions you wanted me to answer, let's go and look at the graph real quick. We can see that the stock was as high as $575, but then made its way down all the way to $466 or so. We can see that earnings was right around here when the stock suddenly went down. I'm going to talk about that in a bit, but in my opinion the stock would probably respect these two support lines in the short term. If it ever drops to that support line right here, that's almost a 7% drop, but in my opinion the stock should balance around this area right here, and then if it breaks the $500 mark, we can see it make its way back to these numbers right here, which is $520, $530 or so. So we've just seen a huge drop after earnings report, and some of you might ask what actually happens. So in short, it was because of soft guidance. Basically, Netflix guided for the next quarter only 2.5 million subscribers, way below Wall Street estimates of 5 million. But this actually happened because, well, Netflix posted 110% growth in the first half of this year. It added a massive 25.8 million subscribers compared to the 12.3 million in the first half of 2019. Netflix added nearly as many subscribers so far this year as it did for the whole of 2019 last year. So we shouldn't really look into this short-term drop. It's actually a buying opportunity in my opinion, and there's a nice quote from one of the analysts that I want to share with you. Cash in the door now is better than cash in the door 3 months from now. I wish more companies would have bad moments like Netflix has right now, where it actually outgrew the whole of last year in just the first 6 months of this year and then reported soft guidance for the rest of the year, which is still a nice guidance to have for any other company out there. But maybe for Netflix, we expect still hyper growth to be happening year over year and quarter over quarter. Now let's look at the balance sheets real quick. So free cash flow was positive for a second consecutive quarter at almost $900 million. Compare that to last year's minus $594 million. We can also see that cash positions have been increased. Total assets has increased, total liabilities have increased as well, but not as much as the total assets and cash. We can also see that total stockholders' equity has been increasing, which means that the company is turning more and more profits each and every year. Now, another reason for weak guidance is to lower expectations. Maybe expectations were a bit too high for Netflix, so they lowered the expectations, and then if they beat it at the end of the year, next quarter, that might have a positive impact on the stock and people will look at it in a different way. All right, let's now look at a couple of the questions you have asked. So first up, we have what projects does Netflix have up their sleeves to continue growing and whether their competition is a threat. Can you come around Roku as well if you believe they are a competitor? First of all, I will cover the competition a bit later, but let's start with the first part of the questions. Netflix has the biggest budget out of all the streaming platforms out there. For this year alone, it has a budget of $17 billion and it is expected to grow to almost $30 billion for the next 5 years. Netflix executives said that they have enough content for 2020 and 2021. They are saying actually that there will be more Netflix original content coming next year than there was this year. Now, regarding your point on Roku, well, first of all, Roku and Netflix are not competitors at all. Both of them are benefiting from cord cutting in the United States and obviously worldwide, but they're not competitors. You can take Roku, for example, as a smartphone and Netflix as an app on your smartphone. Roku enables you to watch content if you have internet access, obviously, on your TV. So there will be streaming platforms such as Netflix, YouTube, Amazon Prime, HBO, Hulu, etc. All of that will be available and is available on Roku. Roku basically facilitates people to have access to streaming platforms. And actually Netflix has the best spot on Roku, which is actually the first thing you see when you open Roku. Next up, we have a question regarding monetization and new products out there. So what new products can they release and monetize, since production costs are big and I don't think only subscription fees will be enough to grow? Well, in my opinion, I don't think Netflix will change anytime soon. It will still stay subscription-based model that have no ads in them. As for growth, I think Netflix will continue to grow. As of now, they have penetrated the US market only 57%. I say only because there's still a long way to go. As their CFO has said, they have not reached the ceiling in the United States. And if they can actually replicate the penetration that they have in the United States, but globally, they would maybe reach almost 500 million subscribers worldwide, which is more than double than what they have right now. As we can see, right now they have 182, almost 183 million subscribers. So there's still a long way to go for Netflix. In my opinion, the business model they are using right now is extremely effective, and I think they will be using it for the next 5 to 10 years for sure. But I would like to see them maybe add new products such as live coverage of sports events, for example Premier League, but I know Premier League, for example, is very, very expensive to get the TV rights for that. But in any case, maybe get the much hyped esports coverage, or any other sports will do. But to continue on the fact that Netflix will continue to be a subscription-based model, they're actually trying new things in regards to the subscription. For example, in India, they're actually adding a new type of subscription, which is mobile only and costs only $4.7. It's extremely cheap, but it makes sense because, well, first of all, India is very price sensitive and has a huge market of mobile users, more than 400 million mobile users in India. Obviously, not a lot of people have access to fast internet or even electricity in India. So there's an even cheaper plan for just $2.7, which is also mobile only, not in HD. India is going to be a huge market, not only for Netflix, but for a lot of tech companies out there. I'm actually going to cover India as a country, as an investment in my next video, so stay tuned for that. If you have any questions, again, go to the community tab and I will be posting there soon. And actually, Apple tries to undercut Netflix in India by offering their service for only $1.4. If that will be sustainable, it remains to be seen, because as of now, Apple's TV streaming service is not what we thought it would be. It's still very small, still not very developed. Now, to continue on the point of competition, let's look at a couple of numbers regarding their competitors. So first of all, let's name a couple. There's Amazon Prime, which has around 150-160 million subscribers. There's Disney that has almost 60 million subscribers. There's HBO Max and Apple TV. Now I'm only going to cover the big ones. Now, regarding Amazon Prime, not everyone that has been subscribing to Amazon Prime has been subscribing because of the great content that they are offering, but because of the one-day shipping and all the discounts that they get when they're Prime members for Amazon. So take that into consideration when you see the next couple of numbers. Now let's look at a couple of pictures regarding the amount of movies, TV shows, and content per dollar you get on each platform. So first up, let's look at the movies. So as we can see, there are way more movies available on Amazon Prime than there are on Netflix, Hulu, or HBO Max. We can also see that you get more movies per dollar on Amazon Prime than on Netflix and the other streaming platforms. Now that will change when we move to TV shows. Obviously, there are still more TV shows available on Amazon Prime, but we can see regarding TV shows that Netflix is growing in numbers, and especially in the quality of TV shows. Netflix has way more quality TV shows than any other streaming platform. Hulu is even higher than Amazon Prime. But again, how many TV shows do you get per dollar? Amazon Prime is still winning there, but Netflix again has a high quality TV show offering. So as we can see, Amazon Prime might have the biggest library out there, but in my opinion, Netflix has way more high quality content on their platform. And don't forget, Netflix is still growing year over year with the amount of content that they will be adding to their library. Another important thing I want to point out is that this year competitors has been spending way more money on advertising than Netflix. For example, Amazon has spent over $170 million on US TV ads. Obviously, it has been paying off because we've seen an insane increase of subscribers on both platforms. But again, for Amazon Prime, I think most of the people have been subscribing because of the fact that we're staying at home and everybody's ordering stuff from Amazon and want to have that one day shipping. So the question is, why isn't Netflix advertising as much as the others? Well, Netflix actually uses another strategy, which in my opinion is way more effective than what the others are doing. Instead of advertising their streaming platform, Netflix advertises their new movies and TV shows. So for example, when the new season of Casa de Papel is coming out, they will advertise that TV show, and that way that attracts way more people to their platforms, because people will start watching the TV show and then probably will get addicted and will want to watch the other seasons as well. The Netflix home screen is the best digital billboard money can't buy. Advertising within Netflix remains a better bet than spending money on television ads like other media companies, like I said, and as a result, Netflix will have more cash to make its service better and stay ahead of the competition. So why am I so bullish on Netflix? Why do I think the stock still has a long way to go? I actually believe that the stock could reach $1,000 in the next couple of years if they can continue the way they are growing year over year and get more of the market share in the streaming industry. One of the reasons is that Netflix is not only a content provider, but Netflix is also a big data company. They know exactly what most of their subscribers want to watch, what they're watching, how long they're watching, if they like it, if they don't like it. Now, with that data, they could go and contact high-end producers, directors, and say, look, we know what our subscribers want to watch. Do you want to make a movie? Yes, no. Most likely, producers and directors will choose to make movies and have that streamed on Netflix because they know it will be successful, and that, in my opinion, is a huge advantage that Netflix has over its competitors. That said, I do think the other platforms will keep on growing. Like I said in my Disney video, I do think Disney could reach subscriber levels that Netflix has been reaching for the last couple of years. Last point before I end this video, I think Netflix will be a household name. Most of the people will be using Netflix or did use Netflix at one point in their lives. And that is why I think Netflix could reach $1,000 sooner rather than later. In my opinion, in the next 5 years, that should be the target. If you agree with me, let me know down in the comments below. If you have any comments and questions, leave it in the comments below. That will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed yet, maybe hit that subscribe button. As always, guys, take care, stay safe, and see you all in the next video. Bye bye.